180 billion. That is the number of exchange-traded derivatives contracts that changed hands globally in 2024.
Yeah, which is just, it's an insane number.
It really is.
Yeah.
Like, just think about the sheer scale of that number for a second. 180 billion contracts.
Right.
That represents a 39% jump in just a single year.
Mm-hmm.
So welcome to the deep dive, where we are unpacking what that massive shift in the financial landscape actually means for your career. And more specifically, we're evaluating a credential that is really just riding that massive wave right now.
Right, the CFOA.
Exactly, the Certified Futures and Options Analyst.
Yeah, and I mean, it is staggering when you really look at that 39% leap, because when an established financial market jumps by nearly 40% in 12 months, you aren't just looking at like a passing trend.
No, not at all.
Right, you are looking at a fundamental structural shift in how capital is being protected and, deployed across the entire globe.
Okay, let's unpack this. Is the CFOA actually worth the time and money? Because with all this attention and honestly just a flood of capital pouring into the derivative space, people are scrambling to prove they know how to navigate it.
Oh, absolutely. Everyone wants a piece of that pie.
Right, and the CFOA, which is issued by the International Council for Derivative Trading, it just keeps coming up.
Yeah, it does. So we are going to do a brutal cost-benefit analysis today. We need to look past the marketing and look at exactly what this credential signals to an employer.
Mm-hmm.
We're going to dissect the mechanics of what it takes to pass, and then figure out exactly who this serves best. Whether you are a college student, someone trying to, pivot mid-career, or an active trader who's already on a desk.
And just as importantly, I think, we need to outline exactly who should stay far, far away from it.
Yes, definitely.
So let's start with the cost side of that cost-benefit analysis, specifically the format of the exam, because frankly, it sounds like a nightmare.
It's intense, yeah.
I mean, it is 100 multiple-choice questions, and you have exactly 80 minutes to finish it.
Which means you have less than a minute per question. It's 48 seconds, to be exact.
Wow. 48 seconds.
Right. So it is not designed to test how well you can ponder economic theory. It is a sprint. It demands this rapid, almost instinctive recall of really complex mechanics.
And the pass mark is set at 60%, right?
60% to pass.
But if you really want to flex for a recruiter, scoring an 85% or higher earns you a grade A distinction.
Right.
And, here's what really caught my eye about this syllabus. There is zero general finance filler on it.
None. Zero.
It is 100% focused on futures and options.
Yeah.
And on top of that, there are no prerequisites.
Yeah.
Like, you don't need a finance degree. You don't need 3 years of industry experience. You literally just sign up and take it.
Yeah, and that intense stripped-down focus is really the defining characteristic of the CFOA. It removes all the peripheral noise that you find in broader credentials.
Right. Like taking a massive multi-year exam. Like the CFA is kind of like earning a comprehensive degree in general mechanical engineering.
That's a great way to put it, yeah.
You learn about every single moving part of the financial machine. Accounting, ethics, equity valuations, macroeconomics.
Right, the whole system.
Exactly. But the CFOA is entirely different. It is like getting certified specifically to build Formula One engines. You are highly, highly concentrated on one incredibly complex, incredibly fast-moving component.
And, well, what's fascinating here is that that's a crucial distinction. Because in the professional world, a credential is ultimately just a signal. It tells a hiring manager something specific about you that a polished resume just can't reliably convey. So the real question of worth always comes down to what signal are you sending and who is on the receiving end of that signal.
And the signal the CFOA sends is essentially a laser beam.
Exactly. It sends this narrow, blindingly bright signal to prop trading firms, volatility hedge funds, and derivatives risk teams.
Right.
It tells them that you haven't just skimmed a chapter on derivatives in some college textbook. It says you have mastered listed futures and options markets as a complete standalone discipline.
Let's actually talk about what that mastery looks like.
Yeah.
Because if you only have 48 seconds a question, you aren't just regurgitating basic definitions.
Oh, no, not at all.
The curriculum goes straight into the deep end.
Yeah.
Like, we are talking options pricing, the Greeks, and complex volatility strategies like straddles, strangles, and iron condors.
Yeah, and to really understand why employers value this, we have to look at the mechanics of those terms. Because if a candidate knows what an iron condor is, they understand how to navigate nonlinear risk.
Okay, let's break that down for the listeners,
Hmm.
because Iron Condor sounds like a Marvel villain, but what are we actually talking about mechanically here?
Right, right. So, if you just buy a stock, your risk is linear. The stock goes up, you make money. It goes down, you lose money. It's simple.
Right, a straight line.
Exactly. But an iron condor is a multi-leg option strategy. You are simultaneously buying and selling different options contracts at different strike prices.
Mhm.
You aren't betting the market will go up or down. You are betting that the market will stay within a very specific volatile range over a specific time period.
Wow.
So you have to understand how four different contracts interact with each other simultaneously as the clock ticks down.
And you have to do the math on that in under a minute on this exam.
Yeah,
That's
exactly.
intense. We also mentioned the Greeks. Now, for anyone listening who isn't currently staring at a Bloomberg terminal, what are those?
The Greeks are, they're essentially the vital signs of an option.
Okay.
So delta tells you how much the options price will move if the underlying stock moves by $1.
Right.
Theta is the clock ticking. It measures how much value the option loses every single day just by sitting there. And Vega, well, Vega measures how sensitive your trade is to sheer market panic or, volatility.
So the exam forces you to calculate those vital signs in real time. And it doesn't even stop at options. You have to understand futures mechanics too, right? Like margins, daily settlement, hedging
Oh,
strategies.
absolutely. Margin is a huge part of it.
Why is the margin aspect so critical to, say, a hiring manager at a hedge fund?
Because the stakes of a mistake are existential. I mean, when a market is moving 180 billion contracts, a tiny miscalculation in margin requirements doesn't just mean a single trade goes bad.
What happens then?
Well, if you violate your margin limits on a highly leveraged futures position, the clearinghouse can step in and liquidate your entire desk.
Oh, wow. So you take down the whole ship.
Exactly. So
Yeah.
the CFOA signals to an employer that you understand systemic risk. It proves you know how to not blow up the firm.
Okay, so this is a crucible. A 100-question sprint testing complex, life or death financial mechanics. Which I guess brings up the question of who actually uses this.
Right.
Because if I'm a senior in college looking at this syllabus, I'm probably terrified. How does a student leverage something this intense?
Well, a student actually has a massive structural advantage here, and that advantage is time.
How so?
Because there are no prerequisites, and because the scope is so laser-focused, the typical study time to pass the CFOA is only like 4 to 12 weeks, depending on your baseline math skills.
Wait, hold on though. If I don't need a finance degree to register, and you are telling me it only takes a month or two of studying to prep, um, doesn't that just look like a diploma mill to a hardened hedge fund manager?
I can see why you'd think that, but no.
Why would they respect a month-long certificate?
Because the access is open, but the gauntlet is real. I mean, anyone can sign up to run a marathon, but that doesn't mean everyone can actually run 26 miles.
Right, right. Good point.
The exam is rigorously specific. If you can pass it, you actually know the material. And for a student, being able to knock this out over a summer break before they ever enter the job market, that is an incredible differentiator.
I see. It's about having the proof in hand when you walk into the interview room rather than just promising like, oh, I'll learn it later.
Exactly. Imagine you are a hiring manager at a derivatives desk. You are interviewing two college seniors. One tells you they are a CFA level 1 candidate.
Which is great, right?
Oh, it's highly respected, it shows discipline and a great long-term commitment. But it doesn't prove they can calculate theta on a complex spread today.
I see.
The second candidate has the CFOA. They can immediately talk about volatility skew and margin settlement because they just prove they know it. When firms are dealing with explosive volume, they simply do not have the time to teach you the difference between a straddle and a strangle on the job.
Right. They need you running on day one.
You have to know the mechanics on day one.
So you aren't just showing potential. You are showing a verified, highly specific skill set that is relevant to the exact desk you are applying to.
Spot on.
Now, a student has the luxury of a summer break to knock this out. But what about our second group, the career changers?
Right, a totally different situation.
Let's say you're 30 years old, you're working 60-hour weeks in traditional corporate finance, and you are watching this 180 billion contract derivatives boom just pass you by.
Yeah.
You want in, but you can't exactly pause your life for 3 years to study for a massive exam.
No, you definitely can't. And for professionals looking to pivot, the calculus is entirely about efficiency. When you try to move from a generalist finance role into a derivative-specific position, you face this massive credibility gap on your resume.
Because your title just says analyst or something general.
Right. Your work history says generalist, but the job you want demands a specialist. You need a credential to signal your new specialization, but you likely don't have the bandwidth for a massive multi-year program.
And you probably don't want to spend a fortune to do it either.
Absolutely not.
Which brings up the financial reality of the CFOA, and it's pretty fascinating when you break it down, because the exam fee is a flat $390. That is it.
Yeah, which is incredibly low for finance.
It really is.
Yeah.
And if you want the optional prep materials, those run anywhere from like $49 to $149. And crucially, it has lifetime validity.
And that lifetime validity is a massive departure from the legacy model of finance credentials.
It really is. I mean, there are no annual dues.
Yeah.
There are no renewal fees. There are no ongoing continuing education requirements just to maintain the letters after your name.
Right.
Once you pass the gauntlet, you have it forever.
Which totally makes sense given the subject matter. I mean, the mathematical mechanics of a futures contract or the calculation of options pricing models, they don't fundamentally change year over year.
Right. It's not like tax law.
Exactly. It isn't like tax law or regulatory compliance where the rules are constantly being rewritten by Congress. It is a static mechanical skill set. Once you prove you can build the engine, you don't need to pay an annual fee to prove it again.
So what does this all mean for the career changer? It makes me think of a career pivot, like a home renovation.
Okay, I like that.
If you want to move from, say, analyzing traditional equities into a high-speed volatility fund, you don't need to tear down your whole professional house with a $5,000 three-year program.
No, you don't.
You just need a highly specific $390 CFOA edition to bridge the gap. It is a targeted renovation, not a total rebuild.
And the downside risk on that renovation is incredibly low. If you are a professional and you are uncertain if this credential will perfectly unlock your dream job, a $390 investment and a few weeks of evening study is a very minimal gamble.
Yeah, it's basically the cost of a nice dinner out in New York.
Right, but if it opens just one door at a multi-asset fund that was completely closed to you otherwise, the return on that small investment is monumental.
Absolutely. Yeah. But to keep our promise of a brutal cost-benefit analysis, we do have to look at the limitations.
We do.
Because this credential is not a magic bullet, and there are specific career paths where this would be a total waste of your $390.
Yes, absolutely. This is vital for anyone listening who might be caught up in the hype of those 180 billion contracts.
Mm-hmm.
The CFOA is a precision tool. And a precision tool is totally useless for the wrong job.
Right.
If your career transition is pointing you toward traditional corporate finance, meaning your day-to-day work will center on mergers and acquisitions, financial planning and analysis, or, corporate treasury with zero derivatives exposure, the CFOA does nothing for you.
And the same goes for wealth management and retail advisory,
Yeah,
right?
100%.
If your entire focus is on building client relationships, asset gathering, and doing long-term financial planning for individuals, do not take this exam.
Right.
You do not need to know the settlement mechanics of a calendar spread to help a client figure out their retirement withdrawal rate. For those roles, you absolutely need to stick to the broader generalist credentials like the CFP or the CFA.
It all comes back to signaling, really. Sending a highly technical, aggressive derivative signal to an employer who is hiring for a client relationship role is actually a negative signal.
Oh, that's an interesting way to look at it. A negative signal.
Yeah, because it shows a complete misalignment between your technical obsession and their need for soft skills and broad financial planning.
Okay, so students use it to break the entry barrier, and career changers use it as an affordable fast bridge. But what if you are already inside the house?
Right, the active professionals.
Yeah. Say you are on a prop desk right now. You survived trial by fire. You know how to trade options intuitively. Why spend $390 on a test for something you already do every day?
Because informal knowledge is notoriously hard to transport.
What do you mean by that?
Well, many professional traders learn their skills by being thrown onto a desk. They learned the mechanics through raw, painful experience, and they survived. But how do they prove that expertise to someone outside their immediate circle?
Right. If you want to raise capital for your own fund or move to a different tier of institutional trading, you can't just walk into a meeting and say, trust me, I know how to manage Vega risk.
Exactly. Trust me doesn't work in institutional finance. The CFOA gives these independent traders and active professionals a formal, verifiable designation.
Hmm.
The results are pushed to the Credsverse public registry, so it takes that self-proclaimed trial-by-fire knowledge and subjects it to a formal public assessment.
It makes it real to outsiders.
Yes. It provides third-party verification that, yes, this individual has actually mastered the underlying mechanics. It essentially institutionalizes their hands-on grit.
And the need to institutionalize that knowledge really clicks when you zoom out and look at those macro trends we started with.
Yeah, ties it all together.
Because that 39% jump in volume isn't just retail day traders messing around on an app. The entire ecosystem of finance is changing. Derivatives are no longer a niche, exotic tool relegated to the dark corners of proprietary trading desks.
Not at all. Institutional asset managers, massive family offices, university endowments, and really sophisticated multi-asset funds are now routinely using these instruments.
Wow, even endowments.
Yeah. They use options overlays, which basically means using options to hedge their massive traditional stock portfolios against sudden market crashes.
Like buying insurance.
Exactly like buying insurance.
Yeah.
They use futures-based strategies to manage interest rate risk. These are now standard, everyday tools required to protect capital in a highly volatile global market.
Which means the very definition of a standard investment analyst is fundamentally changing.
The implications of this market shift are profound. An investment analyst or a portfolio professional who deeply understands the Greeks, who understands margin requirements, who understands complex risk frameworks for derivatives, they are vastly more valuable today than an analyst who only understands how to read a traditional balance sheet. The CFOA formalizes that specific knowledge in a way that generalist credentials simply cannot match because, generalist exams might only dedicate 10% of their syllabus to derivatives.
And it isn't just the traders and portfolio managers who are being forced to adapt either. This structural shift is rippling into adjacent roles.
Oh, absolutely.
Think about risk analysts, compliance officers, and operations professionals at these firms. Even if they aren't the ones pushing the button to execute a massive iron condor, they still have to understand the structural risk of what the trading floor just did.
Yeah, the back office has to speak the exact same language as the front office. When a market is clearing 180 billion contracts a year, the operational and settlement risks are astronomical.
I can't even imagine.
Having an operations professional who has passed a rigorous assessment on futures mechanics and options settlement is a massive asset to a firm's overall risk profile. It ensures that everyone in the building understands the specific dangers of the instruments they are handling.
It is genuinely incredible how a single 80-minute exam can ripple out and affect so many different facets of the industry, from a college senior's resume to a multi-billion-dollar endowment's risk compliance team. It all comes back to that idea of absolute precision.
And that is the core argument for the CFOA.
Yeah.
It is not that it is objectively better than a massive legacy credential in absolute terms. That is a false comparison.
Right.
The argument is that for the very specific context of listed futures and options markets, the CFOA is more precisely calibrated than any alternative available today.
Let's bring this all together. We set out to answer if the CFOA is actually worth the time and money. And based on the brutally honest mechanics we just went through, I think we can synthesize a pretty clear answer.
I agree.
The CFOA is a highly accessible $390 credential with lifetime validity. It acts as a precision tool. It is specifically calibrated to prove verified mastery of complex derivatives for finance students who need to stand out immediately, for career changers who need a fast, targeted renovation to their resume, and for active professionals who need to institutionalize their trial-by-fire knowledge.
Yeah, well said.
In a global market moving 180 billion contracts a year, that specific precision absolutely has real, tangible value, provided you are staying in the right lane and avoiding the generalist roles where it just falls flat.
Exactly. And, the rise of this credential points to a fascinating shift in how we view professional education as a whole. And I think it leaves us with an incredibly important question to consider about the future of finance.
Oh, what's that?
Well, as financial markets become increasingly complex, incredibly fast, and highly automated, broad generalist knowledge is rapidly becoming a commodity.
That's true.
So moving forward, will hyper-focused, lifetime verified micro-credentials like the CFOA become the primary currency of professional hiring? Will these affordable, laser-focused signals eventually replace the massive multi-year legacy programs entirely?
That is a brilliant question, And exactly the kind of structural shift you need to be paying attention to. It challenges everything we assume about how to build a resume. Keep mulling that over as you look at your own career trajectory and the credentials you choose to pursue. Thank you so much for joining us on this deep dive into the CFOA, and as always, keep exploring.